Hello everyone, welcome back to another aftermarket review of the day. So I'll be going over what I did today. I took a trade, although it was a lower risk trade. I took like a half position today. It was a win. I think it was like $560. Let me check. Yeah, $562, which brings my funded account just $200 $200 in drawdown, which isn't too bad. So we're going over the trades. So overall, looking at the news for this week, we also only have one full news day, which is Tuesday. So today's a no news Monday, something to keep in mind. Now when we go to the analysis side of things, this is something I've been looking at for a while, but we've completed this monthly move from internal range liquidity to external range liquidity. We've hit that external range liquidity. So this is all-time high, so I will not be kind of like too quick to look for bearish moves if I don't have good confirmation. So going down to the daily chart, we can still see that we're up here, and we haven't tapped into any of these daily fair value gaps. This one that I have highlighted is the closest one. So if we get a previous week or previous day high SMT, then that's a good kind of framework to look for retracement back into this fair value gap. But however, if we have no previous day high SMT or previous week high SMT, then that is just an indication to look for continued higher prices. And when we drop down to the 90-minute chart, this is what it looks like. So I have marked out here this new week opening gap because we gapped down over the weekend. But as you can see, in between the assets, we have no previous day high SMT. So I'm not going to be looking for that retracement into a daily fair value gap. I'm going to instead look for just continued higher prices. And also, this is the range on the 90-minute chart, and this looks like an internal range liquidity move, tapping into this fair value gap, and now we can move to external, being previous day high. So going into today, I am looking for longs up into previous day high. So that's the plan. The game plan is here. What's my bias? Bullish. The invalidation of my bias would be if we got a previous day high SMT. I'll be looking for opportunities at 9 a.m., 30 minutes before market opens. And where am I looking to enter is on bullish SMTs, entering off low time frame bullish SMTs and targeting previous day high. So yeah, that was the plan for today. And when I go down to the lower time frames, okay, let me just take this out. I didn't know this was making things confusing, but I have highlighted here the SMTs that I was paying attention to upon entry. So on the 15-minute, whatever. Oh, sorry, this is a little bit messy, but on the 15-minute, you can see that NQ made a lower low, and ES and YM made a higher low. So that is a previous session low SMT, because it was I'm paying attention to the London low SMT. So we got a 15-minute SMT down here, and then we got a 5-minute SMT here with NQ and ES driving lower, but YM never taking out the previous 90-minute low. So that's the SMT I was paying attention on. And now, why was it a half risk trade? Because if we're looking at the 90-minute chart, this is how I was looking at round about the time of my entry. So imagine this is my target, previous day high. Just put previous day high. So those are my target previous day high. But also was paying attention to the new week opening gap right here, and we drove up higher and then we just got harshly rejected from here, which made me a little bit, iffy, because upon my entry, this is how things looked. Looking a little bit like sus. So we drove higher and then got rejected off that new week opening gap, and we've had some very bearish moves, and then we had a very small change in state of delivery here, which is still valid because we closed above this down close candle, which is practically a doji. And previous day high was all the way up here. It was around like a 5R to the final target. So because of how we were reacting really bearishly after the new week opening gap, the fact that we had, just a small change in state delivery candle, and that we had a low risk reward to the target, I decided to enter half risk on the trade. I don't find that like an irrational decision or an emotional decision per se. I mean, I do see the value in it, and I do see its reasoning. But yeah, this of course would have been a nicer trade if it was full risk. So then, after just a few candles, we displaced higher, and then I brought stops to break even quite quickly when it moved higher. And then the whole day, it was just kind of grinding higher, nice and slow, and my last trail stop was here. And then it just ticked me out and then continued higher, which is a little bit annoying. But this was essentially the trade from here to that swing high. From here to this swing low. So around a 1.7R win, but because I was, using lower risk, it was only it didn't even cover my loss from last week. So it was $562. I normally risk $750. So it was like a 0.75 win, which, it isn't bad. It's something for sure. Just isn't as good as, as it could have been, I guess. This was a discretional choice, and I'm still trying to figure out if I should, just do the same risk on all trades, which is normally what I like to do because it keeps it nice and simple and mechanical. So maybe that's something to take away. It's just, if the model is there, if it's valid, then just take a normal position size. Maybe this was a little bit of fear in me, risking a little bit lower. Anyway, so that's about it for my review for today, and we'll see what tomorrow provides. Alright, thank you. See you tomorrow.